we look at like how simple it is to make a phone call. I mean, you just dial a number and you take your phone anywhere in the world. Uh, and that's kind of an amazingly convenient yet secure and private experience. We're trying to extend that same ease and security and privacy to all digital transactions.
Welcome to the Tearsheet Podcast. I'm Zack Miller. We don't spend a lot of airtime on the podcast talking about what happens behind payments and e-commerce transactions, particularly where it comes to ID verification. It's technical and more than anything an enabling technology. But from time to time, we invite on companies that are doing something novel in a way that changes the way the game is played. Today's guest is Payfone's Rodger Desai. The company's raised over $100 million and has corporate investors like Amex, Verizon, Transunion, MassMutual, and Synchrony on the cap table. That's because Payfone makes e-commerce, where merchants connect with buyers, as trusted as making a phone call. In a way, Payfone is creating a new form of credit score, what CEO Rodger Desai calls the trust score, which is intended to cover almost every adult in the U.S. Payfone's Rodger Desai is my guest today on the Tearsheet Podcast. Before we hop into our show, I'd like to thank our sponsor, MX, for supporting Tearsheet's work. MX is the leading data platform for banks, credit unions, and fintechs, enabling its clients and partners to easily collect, enhance, analyze, present, and act on financial data.
Hi, Zack. So I'm Rodger Desai. I'm one of the founders and CEO of Payfone. And at Payfone, we really help digital organizations try to achieve their aims, whether it's in banking, financial services, insurance, healthcare. Digital is the future. We really try to help people maximize the opportunity in digital.
And how do you do that? So can you give us a little bit of, introduction to Payfone?
Yeah. So, to us, we look at, one of the most important things you have to do is confirm someone's identity in order to do business with them. And if we look at the experience of consumers these days, even our own experiences, it's just riddled with interrogation and intervention. So it's just hard to do anything without having to prove we are who we claim to be. That really leads to lots of bad outcomes, whether it's kind of abandoning the transaction or making it so frustrating that you don't go through the entire effort. And that adds operating expense to businesses, and that goes back and adds cost to products and services. We look at like how simple it is to make a phone call. I mean, you just dial a number and you take your phone anywhere in the world. And that's kind of an amazingly convenient yet secure and private experience. We're trying to extend that same ease and security and privacy to all digital transactions.
Interesting. And just before we hop into going a little deeper into the weeds, what was your background? And I guess what was the genesis story for Payfone?
Yeah, it's always, I always find that a fascinating thing to ask about. So many of us have
so much about people and companies that way. Yeah, definitely.
Yeah, especially kind of how their unique lens of looking at the world. So many of us have a pretty deep telecom background. And when we look at the world from the lens of where we came from, which is how phones authenticate themselves, it is kind of an amazing experience. It's kind of everything the web aspires to be, which is secure, convenient, private. I don't share my name, address, social security number when I'm traveling abroad on my phone. I can make calls without having to fill out forms, and I know that behind the scenes, everything I do is going to be billed accurately. We don't expect to find calls on our phone bill that we didn't make. So that kind of same thing that makes it so you can take your phone anywhere physically, and it just works in this really convenient, secure, private way. Payphone's intention is to bring that to the web. So we thought, well, instead of taking your phone to France or Germany or India and kind of using it when you're away, why can't you take it to a bank or a merchant online? So instead of somewhere physical, somewhere digital, and use that same kind of inherent properties and make it so amazing to use and create such a great experience, kind of bring that to digital.
91% of mobile banking users prefer using their app over going to a physical branch. But it's no longer enough just to offer an app. Customers expect, demand, a really good experience. That's where MX comes in. Its new mobile app, Helios, helps banks and credit unions stand out in today's world of mobile banking, going beyond simple transactions and account management. Does your mobile app get thousands of 5-star reviews? Does it increase your engagement and lead to higher brand loyalty and ROI? Check out Helios by MX at MX, that's the letters M and X.com.
So is it fair to say that in a way your phone becomes sort of your identity online?
Yeah, I think we were, that was kind of our thesis when we started. Um, and now it's somewhat obvious. I mean, your phone number is now the master key to almost every digital experience. And you need your phone number to interact, whether you're calling, texting, or a web session. Your phone number is kind of key to all those experiences. If you think about, if you forget your password for a given digital service, you're often using your phone number to help reset it. So I think it's become almost an assumption now that the phone number is key and almost the master key to everything digital.
Well, so you compared sort of, at least in the Genesis story, to our use of phones, to where the web is. And I guess with the differences with phones and making phone calls, there's a certain trust, I guess, that the system engenders. I trust that when someone calls me on the other line, they're not able to steal my information, or that somehow it's probably most likely a person who knows me. Um, we lack all that online, right? Is that part of the issue that you're addressing?
Yeah, one of the kind of most amazing findings for us is that even in 2019, it's still much easier to do business in person than it is online. That's reflected in almost every kind of transaction. So whether you're applying for a credit application, a loan, completing an e-commerce purchase, it's just easier to do business in person than online. And that really comes down to this, it's hard to easily verify people's identity without sacrificing something along the way. And so, we kind of call that the trust gap, the difference between the approval rates for something in person versus the approval rates for something online. And our mission at Payfone is really to close that trust gap. And we come up with a very specific product to do so. We call the trust score. And to us, that's a measure of identity confidence, of how likely confident we are that the person is who they claim to be, so that businesses can have more confidence to approve more transactions.
And I guess, what are the inputs into that trust score? That's a really interesting way to quantify it.
If you look at trust, there's some great research. There's been great research for years, and almost every year more, even recent McKinsey analysis, that the basis of trust is interactions over time. So, like if I meet someone for lunch, every month for the last 10 years, that's a pretty good basis of trust. And one of the core problems the internet has is that there's no kind of way to store or share that kind of information with consumer consent. So, for example, I could be one bank's most profitable customer, but then I open an account at another bank and I start over, because there's no way for like the first bank to kind of share my reputation, or for me to bring it with me when I open new accounts. So the internet is still filled with kind of one-off relationships, and you're essentially starting over with each one. Your phone doesn't really work that way. If you think about, if I take my phone to another country, if I'm registered to Vodafone UK when I go to London for a trip, I have no relationship with them, and it's a merchant in effect. But I don't start over. If I had to start over, I could only make a few calls a day until they trusted me. So our notion is that if you look at some basic signals like, well, how long has someone had their phone number? Not just how long they've had it at the current provider, but how long have they had it from the beginning, and what kind of activity and behavior do they have that phone number? Both of those components can be the basis of trust. So kind of behavior over time, to us, gives you a great signal of whether this is a burner phone or someone's actual phone. I mean, that's one of many signals that we use to make that assessment. But our trust score is a kind of a real-time assessment of how likely this is you by proxy of that phone number.
And I guess the product of getting a more accurate trust score is that you can approve more real transactions, right, at the end of the day, which is a total boon for the merchant, right?
Yeah, and one issuer we saw was only approving about 15% of their credit applications online, and the same issuer in a physical setting was approving about 60% of the applications. And from an economic standpoint, it was pretty much the same cohort in terms of income and FICO range. And it really just came down to one of the leading factors of that trust gap between 60% kind of in person and 15% online was just they weren't convinced that they could trust the person was who they claimed to be. Often, if you look at the profile of fraudsters, they're going to be using burner numbers, burner phones, or using a variety of attacks to kind of spoof a phone number or spoof an identity. These things are things that Payfone can see in real time and assess and calculate as part of our trust score. Someone's trust score could be very high in one transaction, but then we see something that looks like an account takeover, the phone number via something like a SIM swap, and the trust score is much lower. So that our customers know, well, the first transaction they should let through without any interrogation and make that a beautiful experience, complete the transaction. And the second one, they should inspect further. So it gives them kind of the insight to know where to spend their operating capital to assess and vet things further versus let things through. In our view, if you look at card present acceptance rates, which in the US are 98% now, that's something we could get digital to. We can make digital almost the same, where 98% of interactions, whether they're new account openings or calls to call centers or downloads of applications, all of those could achieve the same kind of acceptance rate or pass rate of 98%.
And how reliant are you on mobile phone networks essentially to work together with them? Like, can you explain sort of the way the ecosystem is set up?
Yeah, it's a big question, because I think there's an assumption that the truth or most of these signals is within a handful of phone companies. The reality is that there's about 3,000 phone companies in North America, and they all sit upon kind of core telecom infrastructure. And if we think about, well, how would 3,000 phone companies work together in terms of people moving from one company to another or changing their phone number, all the things that we can do, upgrading your phone, it's because the core takes care of most of that heavy lifting. And one of the main kind of things that Payfone does is access the core directly. So we see many of the events. In fact, we see about 8 million events per day in which things change that we have to triage through to manage identity. Like, simply put, if today this is Zack's phone number, then how do we make sure that that's the case going forward, whether he may change his phone number, give up his phone number, or someone could take it over. All those are assessments and signals that we value in real time. Last year in the US alone, 50 million people gave up their phone number, which is pretty striking. I've had my number for 20 years, but the rise of prepaid, prepaid is now 25% of the US. There's just a lot of noise within the notion of managing a phone number. We take a lot of the complexity out for our customers.
Interesting. I know you've done some research recently and came out with a paper recently that showed how your diversified signals yielded higher rates. Can you talk about what you tested and sort of what the results were?
Well, there's been more and more questions that we get from our clients. These are traditional banks, healthcare insurance companies. I think one thing that I think everyone can agree with is you don't want to have a single source of dependency or failure. And so the question we get asked increasingly is, well, how do I have redundancy in a system in which I'm relying on phone numbers and relying on verifying the ownership of those numbers and managing that going forward? Well, how do I make sure there's no single point of failure? So the request we had in this particular report was, well, what would it look like if you were to have to verify the ownership and operator of a phone number without having to use direct mobile operator signals? So meaning just accessing the core telecom network that all the phone companies use and other signals that we get from additional sources. And I think the results are quite striking, which is we're actually able to identify many more numbers than with the operators alone. Now, if you think about it, in the US specifically, the phone companies are good at managing kind of postpaid master accounts. So if I have a postpaid contract with a given operator, and I'm the head of the family plan, then they had to vet me in order to kind of give me that contract. But that leaves about 50% of mobile phones, whether they're family plan lines or prepaid, in which the kind of the major tier one phone companies don't really have a good view on who's owning and operating that phone number. And then again, of course, even though mobile is the fastest growing channel, you still have voice over IP, landline. In order to get kind of a comprehensive view, so covering all types of mobile phones beyond postpaid, as well as voice over IP, as well as landline, we had to we did an assessment of what our rate of identity verification look like, independent of mobile operator signals, and it was quite high.
Interesting. And you talked about some of your customers being banks. Like, what are some of the use cases, where they'll work with Payfone?
So I think banking specifically, there's several major macro trends and drivers. One is, of course, as EMV is rolled out into the US, fraud has moved to channels where you don't need the EMV chip. So call centers. Today banks get attacked in a call center at an alarming rate compared to in the past. So they have to have very simple, powerful identity proofing for every call that comes in. Today it's fairly easy for almost anyone to spoof a phone number. So a fraudster can call into a bank spoofing a victim's phone number, and that is going to create more work for the bank to figure out, well, is this really my customer or someone spoofing the number? So the call center is a new attack area. A second major driver for banks is just the movement of the branch to the phone and just digital banking in general. And that's everything from opening an account instantly on a phone to the ability to do kind of all your services on a phone. That not only drives convenience for consumers, but lowers operating costs for banks. In general, what I think we can all see happening is that you'll have less kind of bank tellers and more bank advisors, and the services in person will become more complex and more strategic, where basic functions will happen on the phone. Well, if you move basic functions to the phone, you really have to have a lot of confidence that these are your customers in order to do everything from a bill payment to a bank wire. And one of the big problems of doing this is there's just so much noise in mobile. Last year, 90 million Americans moved phone companies. So, from one phone company to another, these are all called account ports. Also, 120 million Americans got new phones. So people going from like the iPhone 8 to the iPhone 10.
And does the growth of mobile wallets also make that more complicated or easier?
No, yeah, absolutely. I think the fact that you extend things like payments to third parties just increases the risk and the attraction for the fraudsters to attack digital channels.
And in a way, you're almost positioning yourself as, it seems to me, as like as a credit bureau, but of obviously different type of data. I know you scored a partnership recently with Transunion. Can you talk about what that tie-up looks like?
Yeah, I think we all know the important role that credit bureaus have in the world, especially in the US, in terms of making it easy for people to get credit. There's still a lot of work to be done from an inclusion standpoint. What we saw was that there's another kind of piece needed beyond a credit score, which is we like to believe is our trust score. So, if 10 people apply for something and several of them don't get access to credit because there isn't confidence that they are who they say they are, our trust score we see is complementing a credit score so that more transactions go through. So while we don't opine on credit worthiness, we think identity and credit are kind of two sides of the same coin. So our partnership with Transunion really helps us both extend our services. So we complement their services in mobile and in terms of mobile identity, and they complement our services in terms of plugging into all the kind of use cases that banks already use them for. It also extends globally. Transunion is in 30 countries. We like to expand our services to everywhere our customers want us to. So it also helps us from a global standpoint.
That's interesting because that was actually prelude to my next question. As populations sort of expand across borders, is there more of a demand for your type of service to be able to identify somebody across the border, or is that not a use case yet?
Absolutely. I think that it's, we'll see lots of different use cases of, U.S. companies, trying to interact with folks abroad, whether it's an Amazon or a MasterCard. But over time, as we have just seen with Facebook Libra announcement, we're going to move to a world where peer-to-peer everything is going to happen. So you'll have two people in different countries that want to transact for whatever means that is, and you have to essentially kind of know your customer on each endpoint. So today we think that this is the beginning of a very long journey where we have a truly global digital economy and any two folks can interact with each other. I think what Uber and those kinds of companies have showed us in the US is the days where it's the distinction between who are customers and who are merchants is blurring. In the future, we're all going to be customers, we'll all be merchants, and you'll need identity to make transactions more seamless.
Interesting. So, I mean, it's obviously been a busy year for you guys. I mean, you're growing like a weed, you raise money, partnership. I guess, what do you have in the hopper that you can share with us, like looking, to the second half of 2019? What are your big priorities?
Well, today, Payfone, I think we like to pride ourselves on a few things that we're really unique in. We have the strongest, broadest coverage to verify kind of who owns and operates the phone number. Our trust score is the industry leading standard around measuring identity confidence in real time. So, kind of catching SIM swaps, device swaps, and other types of account takeovers. I think the thing next for us that's really needed is to really move into inclusion. And what that means is, today a prepaid is 25% of the U.S. Often we meet traditional banks that still remember a time when prepaid was 3 to 5% of the U.S. And many of them have general treatment rules that say, well, if this new account opening is made with a prepaid phone number, well, we're not going to allow it to be opened, or they need to go to the branch, or we're going to put them through more inspection and more interrogation. Now that it's 25% of the U.S., what we like to do is help bring trust to prepaid and from an inclusion standpoint. A lot of prepaid actually looks a lot like postpaid, meaning the tenure, the behavior, the funding mechanism, all give you a lot more trust. So that's going to be good for everyone. It'll make so traditional banks can bring on more customers more easily, which is good business for them. And it will extend into populations that typically are not, almost treated like second-class citizens in the digital economy. So inclusion is a major theme you'll see coming from us in the balance of 2019.
Interesting. And Rodger, we have time for one last question. I'm curious personally for you as a CEO, what have been some of the biggest challenges and growth opportunities you've had in this role over the past 10 years?
I think that identity and authentication, all these things are pretty cerebral topics. And I think
you're like right in the middle of all the themes right now. Exactly.
Yeah, and I think it's hard for everyone. I mean, it's something that we learn things on a weekly basis, even though we've been doing this for a long time. So I think the biggest challenge is for banks to get clarity through all the information that's out there. And I think that's probably the biggest challenge everyone has in this space. And I think one of the things that we're trying to do is bring a new KPI that can make it easier to evaluate what kind of works and what doesn't work. It's something we call pass rate. We'll be publishing more about that this year. But in the end, if you go back to that first notion that if 98% of digital transactions are good, what the current state is that most businesses only assume 40% are good, and they challenge, interrogate about 60% of their interactions. So pass rate is kind of like, how do we get to 98%? How do we bring a bank that maybe a 40% acceptance rate for a given set of transactions to 80%, 85%, and one day 98%? So I think that finding KPIs to measure success is critical to kind of get through all the noise.
Yeah, well, it'll be exciting to watch as we're able to increase the pass rate over time. Rodger, thanks for joining us on the Tearsheet Podcast today.
Thank you so much.